Today was a big win for the bulls, and I do want to go over a few technical indicators to show you if we are going to continue going higher here in the market. I'm also going to go over the Fed interest rate decision and kind of discuss how that's going to impact the market going forward, and also several positions that potentially, if you wanted to get into some leaps call options right now, you could double, triple, or even quadruple your money in the long term. So I'm gonna dive into that. Now, let's take a look at the portfolio. Currently trading at 748K. So we are rebounding back. Obviously, this value right here doesn't really matter because we haven't recovered on the actual stock market, right? The QQQ has not even remotely recovered, and we're already almost at 650K. So by the time this does recover, and the last all-time high of the portfolio was around 709,000, this is gonna be somewhere around 750,000. And I'm gonna show you exactly how I've been able to do that and why there's a lot of green positions here today on the portfolio. So let's go ahead and dive into it. I'm first gonna talk about just some key points that Jerome Powell spoke about. And basically, the most important ones are interest rates were held steady. So that was, definitely, it would have been nice if he did lower interest rates, but that wasn't being priced in on the CME FedWatch tool. The Federal Reserve kept its benchmark interest rate at 4.25 to 4.5%, but signaled two potential rate cuts later this year in 2025. And we already knew that. I'm going to show you the CME FedWatch tool and show you exactly which months that's going to happen. Okay. A little bit of economic uncertainty, obviously concern over tariffs, slowing growth, which led the Fed to downgrade its 2025 economic growth forecast to 1.7% and raise its inflation projection to 2.8%. And then, lastly, the long-term outlook. Jerome Powell noted that while tariffs are impacting inflation in the short term, the Fed's 5-year projection shows minimal long-term effects. So that was a key bullish sentiment from the Fed. The Fed has a good handle on inflation, and they're in a position where, if we need quantitative easing, they can obviously lower interest rates at any time. And if we needed tightening because of a inflationary environment, which wouldn't be good for the stock market, they can do that to fix it, okay? So I like Jerome Powell's stance on how they are confident right now with inflation where it's at, and they believe by 2027, the interest rates, the inflation will go down to that 2% target. So if we look at the CME FedWatch tool, this is something that I look at to determine, are we still in a bull market, or could we potentially be approaching a bear market? Because if the Fed is raising rates, there's something really wrong with the economy, most likely inflation, and that's not good because basically that just sucks up all the liquidity out of the stock market. Businesses can't borrow money at cheap rates. Consumers, same thing, and it's just not good. So what we see is this actually is a new projection right here. This one came back in end of 2026, 19% chance of a 1, 2, 3, 4, 5th rate cut by the end of next year, okay? So June is going to be the first cut. The second cut will happen most likely in October. And then the following year, obviously, we have the next one being in March and potentially, November or December for 2 rate cuts simultaneously. So this looks good. Now, let's go ahead and dive into the markets, and we're going to go over price levels on QQQ. So as you can see today, we closed at 482, I believe. Yeah, 482.54. And that wasn't quite above this 484 level that I was really hoping for on QQQ. All right, I was hoping that we were going to breach this and then just kind of rest on top of this support level right here. But we could see that tomorrow, okay? And the reason why I think that is not only have we had a bullish crossover on the RSI, but as well as the MACD. The MACD is approaching a bullish crossover here. So if tomorrow we could get above that 484 level, you could probably expect the market to rip all the way to potentially $500 before we have maybe a little bit more of a downturn and then an upswing as well. And the reason I think that is because if we look at VIX, okay, VIX, this is what I was telling my clients in Options Trading University, is that if VIX closes below 20 into this 19 region, that is a very good sign for the bulls. The reason that is because this box right here, this green box, is kind of my zone of confidence and greed. Meaning, once the VIX starts retracting from all-time highs, which we had last week, got all the way up to almost 30. Once we start retracting from those highs and we fall below 20, that's kind of when greed kicks in and people start buying up stocks, okay? And today was kind of the first little glimpse of that. Obviously, we didn't see a major rally in QQQ, but there were some specific names that were getting bought up, and we'll get into that in just a moment. So tomorrow, if we do close, below 19, maybe at 18, that's an even better rate, and for sure, QQQ will rise to $500, which is a pretty key level for us here in the market. So before we jump into the individual stocks, if you do want to be mentored by a seven-figure trader and make multiple six figures a year, click that first link down below in the description. And also, I do give away free trade ideas on my Instagram and my free newsletter, which are both down below in the links. Now, let's go ahead and dive into some of my favorite positions. Hood today was up 6.73%, okay? We closed above or right below, okay, this support area of $43. Couldn't quite get above it today, briefly poked above it, but that's fine. In the long term, this stock is looking very, very good for a nice steady uptrend here. Bullish crossover on the RSI. The PE ratio is close to all-time lows at 27. So I love the fundamentals of the company. And MACD is looking like a bullish crossover here. So the volume bars here are getting smaller. This is good to see. All right, this is good to see. Now, what I did was I actually got back into those leaps call options that I talked about on Monday that I exited. I got back in because, Hood went down one of the days. I believe it was yesterday. And I got back in. And today, Hood was up 7%, 8%. After hours, it's kind of fluctuating. We're actually above the 43 level. But as you can see, I closed out those 6 leaps call options on Monday for about a $1,700 profit, and now we're up $1,500 on these. And these ones I plan on keeping at least until we're up 50%, okay? So I kind of regretted getting rid of those leaps, but I got the opportunity to get back in, and I'm going to hold these ones. So let's talk about a potential leaps opportunity here on Hood. We haven't touched the middle of the Bollinger Band, so I would say it's still, tomorrow would be a decent day, probably the last day you'd get for an entry here if the market continues higher, okay? So that's my expectation. I do expect QQQ to rally from here. If we do go down, we could test this 466 level. We're not out of the woods yet. We did get multiple closes above this weekly moving average, and I think we will reclaim the 200-day moving average. But for some case, if we do dump tomorrow, this 466 level is definitely a place for a potential double bottom. So we're not out of the woods yet, and that could potentially happen. So, we're just playing accordingly, but I am bullish on the market overall. So if we go back to Hood, again, the setup's good here. I mean, the stock is at a massive discount, and it's nice to leverage up the money into some leaps for the long term. We're at still a 36% discount on the stock, and I do believe this year we will head back up to this 65 or 67 level. According to the analyst rating, it's a buy here, 1-year price target 67.89, and I do believe that. I do believe we will get more of a V-shaped recovery on a stock like this. So how I would play it is I would go to the options chain, and what I did was I just went out 2 years, or not quite 2 years, but almost 2 years, January 15, 2027. I think if you want to give yourself just plenty of time to be right and hold these through multiple earning cycles, then I think this is the best way to do it, just to play it safe. Now, my 70 delta call options were the 35 strike, but now they're 78 delta. So what you can do is you could actually purchase the 40 strike. That's a 73 delta. That would cost you $1,600, almost $1,700, versus buying 100 shares of stock, which would cost you $4,300. So I think, levering up your money on some of these would be good. And the cool part about leaps is it's also a placeholder. If you like the stock at 40, let's just say in 667 days, this call option expires, right? Sure, you'd maybe lose out on the premium if the stock was trading at or below, but you'd be able to get assigned on the shares at 40 if you like this stock for the extra long term, okay? So that's always what's nice about the leaps, is that it's also a placeholder for you to actually get assigned shares, but that's not something I've ever done. I'm usually playing these for a quicker profit, maybe in a couple months, a few months, but I will be holding those for at least a 50% profit to 100% profit, okay? So that is a good strike, 40 strike. And I would say getting in tomorrow or this week, if we do continue higher, it's going to probably be your last chance to get into those at a decent price level. So I really like Hood. Cash secured puts are definitely safer on Hood, just for quick income and more passive income. So that would be also, you can go out 37 days and sell the 30 deltas, the 40s, and collect probably over 4% with these. All right. So that's going to be my play there. Let's go back to the next stock, which is Palantir. Palantir wasn't as strong today, kind of trading sideways in this range, which is okay. That's okay, because it gives us more opportunity to acquire more leaps, acquire more shares, sell some more cash secured puts. But I do think this stock will retest and kind of go up to this 90 level. And once we get past 90, okay, and we're able to kind of close above there and kind of maintain this level here, that's when I think we start shooting upwards toward that $100 level. Now, how I played Palantir, we're going to go back to the positions. All right. I have tons of cash secured puts, okay? I have some expiring next week that are in the hundreds. I'm just going to get assigned because there's plenty of premium to collect on some covered calls up there. But as you can see, I have 400 shares, have some covered calls, a little bit above my cost basis. But what I liked is basically these 3 calls that I purchased last week. Okay, they're up $1,100, and I have some more calls as well, 5 more that are soon to be. Once Palantir gets up to 90, these will be in profit as well. So if you wanted to play some leaps on Palantir, I think this is a good point to do it. If you look at the chart, again, we are just shy of that middle of the Bollinger Band. So we're getting to a point where it's not going to be as optimal to get into the leaps. I would say tomorrow would be the last chance if the market does continue upwards like we had today, which I'm 85% confident that it will. Obviously, there still is a 15% chance that it won't, and we will roll over. But either way, if you're bullish long-term on Palantir, they just secured 10 new partnerships. Heineken, Walgreens, there's tons of them that they just kind of signed on. So that is a major catalyst as the stock is going down. So I really like it here. And, what I would do is I would go to those leaps. I would go out. Again, I went out pretty far, 639 days on these ones. Just for the long term, I could hold these through multiple earning cycles. And you can go to the, if you want to go to the 70 delta, the 85 strike, you'll pay $3,100. If you wanted to go a little bit closer in time, you could go to the March 20th to the 80 strike and pay $2,600. Okay, so it really depends on you how long you want to hold these. I hold these like synthetic stock, so I'm really loving this position, and this will kind of be a long-term position there. But as far as cash secured puts, I mean, there is tons of premium to collect still for April, 37 days out. You can go to the 80 strike, you'll be at the 30 delta, which is all the way down here, okay? So you're getting pretty far from where the stock is. There's a lot of support there. That's a really nice place to sell some cash secured puts, okay? And let's do the math on that. So on the 80 strike, we'd collect $425 divided by 80. That's about a 5.3% return in 37 days. That's absolutely insane. I mean, if you were to replicate that every month, that's about a 63% return on your capital, not including monthly compounding. This is annually. So it would probably be a little bit higher than that, like 67, 70%, okay? So tons of premium to collect in Palantir. That's why I'm heavy on it. Those are actually 2 of my biggest positions now as I'm kind of scaling out of NVIDIA, going more into Hood and Palantir, just to kind of diversify out of the Mag 7 as those are kind of the weaker stocks right now because of a global investors exiting their Mag 7 positions, okay? So really loving Palantir here. Now let's go ahead and talk about NVIDIA. I think it's important that, we talk about NVIDIA because this is definitely a darling in the portfolio, but it's really kind of been struggling here, right? It's kind of been struggling. I did say in a previous video that I think we're gonna hit this 130 level, and I still think we are, but I think it may take a little bit longer than we think, okay? Lots of good news. Jensen Huang came out with, said inflation's not really going to impact NVIDIA in the short term, so it's not really, they're not really even thinking about it. And their Blackwell chips, the new ones, the Rubin, Ultra Rubin chips, or they're already in production and stuff. So I really like Jensen's, his outlook on the industry and how AI is just going to keep growing. So I do see more of a, slow and steady uptrend. Kind of like Apple. I feel like NVIDIA is becoming more like Apple. Now, if NVIDIA could go ahead and do some major buybacks, I think that would push this stock up much higher. So potentially expect that in future earnings announcements that, potentially they might do some buyback programs. And I think that would be good for investors, good for the sentiment of the stock. And this would definitely push the price up, to all-time highs around that 152 area. But I do think it's going to be more of a gradual uptrend. So right now, going safe with cash secured puts is kind of the way to go. If I go to my NVIDIA position, I still have these 119s that I rolled down from like 130. And we're just going to wait to collect, the $5,400 on these. So I'm going to be stuck in these for 37 days. I'll let these expire and collect my entire premium. So what I would do there, and yes, I do have some leaps that are underwater, but I've been selling some covered calls aggressively against them, collecting a couple $100, few $100 every single week on those. But what I would do is I would go out 37 days, and just to be safe, you can go either the 28 delta or 26 delta, okay? So somewhere between 108 and 110, I think is a safe space to, if you get assigned at that price, hey, you're getting a really cheap discount on NVIDIA overall, but you're collecting enough premium to compensate you for the month. So if we calculate this, let's do that. So let's just say we sold the 110s, we'd collect $350 and divide that by 110. That's going to be about a 3% return, okay? So NVIDIA returns are pretty stable around the 3%, and you're able to get far enough out to where you'd feel safe owning the stock, right? 110 is pretty much, let's grab this line here. 110 is pretty much down here, okay? So you're getting pretty far down here, close to the bottom Bollinger Band, and there's a lot of support under that at 104. So I really like the stock at this price, okay? It's still at a pretty decent discount here. PE ratio hovering still in the 30s, okay? This is something that I think when the sentiment comes back to the Mag 7, NVIDIA is going to be one of the strongest, probably alongside Amazon. So I really like NVIDIA here, and I think if we could reclaim this 200-day moving average, we definitely push forward. But I think it's going to take probably 4 to 8 weeks to do that. And if we do, then we're headed much higher, all right? So loving NVIDIA, overall great company. I just think, you play it a little safer and, be in it for the long term. So that's NVIDIA. And the last one we'll go over is SoFi, okay? Really loving the stock at this price. This stock has been quite an outperformer in the past couple days. As you can see, very strong chart, kind of like Hood, all right? Kind of like Hood. And I love the fundamentals. 33 PE ratio, just made a bullish crossover today on the RSI. In fact, was pretty much comparable with Hood today, up 6.53%. So really loving this stock at this price, held that 200-day moving average. This is kind of what you want to see in a pretty much, some of these stocks, like some of the tech stocks is like they're hitting bear market prices, okay? I know the overall market we're in a correction, but some of these stocks are at a bear market prices. So what I would do here on SoFi, okay, let's go back to the position. As you can see, we have about 61K in cash secured puts. I have the 10s, 13s, 14s, 11.5s, 13s. So we just tagged them up here. We tagged them up. We're collecting a lot of income, a couple $1,000, few $1,000 here. And, I debated on getting into leaps actually yesterday. Didn't pull the trigger. Wish I would have. But tomorrow, I may actually debate on it if, maybe we get a little pullback on SoFi potentially. If not, we'll just be patient. We'll be patient. But if I were to do some leaps, I'd probably go out to June of next year, and I would just grab the 10s just to be safe. I'll grab the 10s. I know it's 79 delta, but hey, you're going to pay a little bit more, but get more of not a 1-for-1 move, but a 79-cent to 1 move. So I like that there. $5, pay $5, and lever up your money. So I really like that one. And then as far as the cash secured puts go, again, go out 37 days, and you could go ahead and sell the 12s at this point. And let's do the math on that one. So $56 divided by 12, you're going to collect 4.6%. So the premiums on SoFi are absolutely rich, and annualized, that's about a 56% return. So if you enjoyed the video, make sure to give it a thumbs up. I'm glad we were able to do this update video, and I'm looking forward to the Bulls winning this week. Let's see if we could do that. Hit that, smash that like button, and comment down below if you are a bull just like me, and I'll see you in the next one. Take care.